Hello fellow traders, welcome to another episode of the series. Like, subscribe, leave a comment for the YouTube algorithm. Every time you are watching us, you know you will find some unique material in all of our videos. As I have promised, today I will present an experimental indicator. This will be a series of episodes presenting experimental indicators. Some of them is from traders and discussion over the years, and some of them are mine, or at least they don't look like any other out there. Remember, there is no holy grail in trading. Do not expect to win the market so easy. So, without any further ado, let's start. The indicator is called X factor, comes from the Greek letter He. This is a Greek word, chaos, in English, chaos. I will give explanation about the origin and how this came up. You know the chaotic nature of the markets, no doubt. I do not agree so much with traditional tools. Yes, you can use them as signals, no doubt. However, always keep your horizons open and test ideas. When you start trading, the first thing you learn is how to keep a track, how to keep a record of your trades and your accounts. Of course, you learn from your mistakes and this will make you a better trader. I don't know exactly what website you are using and how you are keeping records of your trades. One of them is able to generate a metric based on probabilities. I'm talking about the MyFX book. You know, I have nothing with them. I mean, they are not sponsors or whatever. The original name is called Z Score. Z Score, for people that do not pay attention so much and they are new in trading, is used for calculating the ability of a trading system to generate wins and losses consecutively. So this is one of my systems, close to 55 with 60%. This is a number close, almost the same in all of my systems. What does this mean and how came the idea from that? It shows what is the probability a win to be followed by a win and a loss to be followed by a loss. This gave me the idea to reproduce and to make an indicator that is not actually an indicator, is more of a metrics that will enhance your trading. I will use an Excel spreadsheet and make you understand the idea and how you can use this metric. And please try to stay with me. We will use some unrelated probabilities, and it's very easy to understand the concept. Let's say that your strategy or your technique or whatever you are using has a 40% chance of loss probability. So, what does this mean? That I have put here some examples, and as we continue in time, you will understand the idea and the concept. So, you are executing your trade A. What are the loss probability? It's 40%. Crystal clear. Now, let's say that you did that, you execute your first trade, and you are losing the trade. So we are going to the second one. Now, remember that these two incidents are unrelated. So, what is the probability of losing the first trade and also losing in the second trade? Well, it's very simple. It's a very simple formula. You multiply these two probabilities. So, the probability of losing one trade and losing in the second trade, it's 16%. This keeps on and on with the numbers. So, what is the conclusion? Remember that we are doing some simple statistics here. And of course, there is no perfect indicator or metrics when you are using in your trading. And this is an idea. I will present you my data, of course, because this is what that I have already using in my method. And I'm really glad that I don't have to prove you something because we are always trading our live accounts. And that's why we are here. Stay with me at this part. Of course, we are measuring a probability of 40%. Well, this depends on your system. My winning probability ratio is approximately 39 to 40%, which means that the loss probability in my system is 60%. By experience, I can guarantee and I can tell you, I have never had 7 consecutive losses. Never. Actually, I think it was only once, but it was in the beginning, and I was not exactly sure about the metrics and about the statistics. How you can apply and how you can use that. Remember that we are talking about statistics and probability. Yes, there is a chance to lose 7 trades, to lose 8 trades, 9, 10, and so on. However, numbers are numbers, and they can help you to be creative and become more profitable. Goes without saying, it's exactly the opposite when we are calculating the winning probability, because you will have some consecutive losses. However, you will also have some consecutive wins. So the probability is actually the same, but reversed. And what I mean by that, having some consecutive wins, for example, winning the trade A plus B plus C plus D, will get smaller and smaller as per consecutive winning trade. So this is why this X factor can work both sides. And now I will show you exactly how to use it and how to modify. I will show you exactly how to use this adjustment, if I could use that term. Again, if you are new in trading, I strongly recommend to not continue to this video. I mean, there is no reason to do that. If you are already a profitable trader and you have a solid strategy or a solid technique, so probably you will know your numbers. You know exactly your figures. You know exactly your percentage. I mean, your winning ratio or your losing ratio. And this will help you to calculate and proceed further. So this is just a tip for people that have no idea in trading for sure. I mean, they've already, I don't think they got so far. For people that are already trading, and most likely this is why we created this channel, you can make a use of these adjustments in your trading. I have already used that. Based on my technique and based on my strategy, it approximately gives me 3 to 5% more returns yearly, of course. And this is how I came up with it. I did some tests, of course. We are talking about probabilities. I don't know how it will work with your system. However, if you do have a solid system, a solid strategy, and you are using the same method, most likely you will see the results. I would really like to see some comments, and if you try to use it, even if a demo. But I can guarantee that it will work. So I have a table here. Let's say that we know for fact that we will use a standard amount of USD per trade. In my example, I'm using 1000 USD. This is up to you. If you are trading less or more, it doesn't matter. It also depends on the winning ratio of your technique and your strategy. All these details can be calculated. Of course, we are talking about statistical probabilities. I would really like to know your opinion in the comments. I'm not proceeding in any further actions. I am sure that you will understand the idea. However, yes, if you want to discuss and send me something similar, I'm really glad to take it, and really I would appreciate that. So how I do it, how I apply it in my technique, I know for sure my winning ratio is approximately 39 to 40%. It actually is 39.8 to be accurate. So what I do that, let's say that you are trading and you are losing your first trade. Also, you are losing the second trade, so you have 2 consecutive trades. On the third trade, I do this adjustment. I increase by 1%. So I do not I do not risk 1,000. This time I use 1,010. So I risk 1% more. Don't go to the other side. We won't do it a martingale. We don't want to blow up your account. Of course, you can make several adjustments at these ratios. To be honest, I do not use exactly those ratios because I know exactly my strategy and my technique, and I know exactly how it works. So I can guarantee, I know for sure, that, for example, if I'm getting on the 4th consecutive loss, my next trade will be a bit bigger. However, keep in mind, we are not gamblers. We are using some solid statistical probabilities. Guys, thank you very much for your support. I hope you understood the basic idea, the main idea of this indicator. Personally, I recommend to apply for people that have a solid strategy that is already working. They know their statistics and so on. Of course, you can make a demo, you can try it, you can see results from your own. In this case, most of the times I won't apply any spreadsheets and so on because I have seen a lot of them. The reason is very simple. It's a chaotic factor that will keep work based on probabilities. And what I mean by that, you might do some tests and you will have some results. Someone else will have another results and so on. Again, thank you very much. Trade safe, and I hope I'll see you in the future.